Hello, my Teaserking family. Today we do a little economics talk. I just want to just focus on this. If there's some football questions, I'll answer them. But the meat of this is to really, I find there's a lot of confusing things coming out of like I watch all these YouTube channels and investors and gold and silver and what's going on in Russia and Europe and all this stuff. And I just find that it's a mass of nobody can explain it. Yeah. I'm going to say nobody really understands. They don't understand it and they can't explain it. There's a couple guys that talk really high level that I don't know what they're talking about, and I got a master's in it. So what I want to do is just break it down, simplify it, and try to explain what's going on. So first, let's talk about the gold price today, $17.19. This is not a real price. This is strictly a COMEX price. There's a difference. As I've explained, there's paper. This is gold, or there's real gold, and I have real gold. And everybody talks about COMEX. And when you hear guys online, on YouTube or whatever, and they start talking about, well, I think gold's going to hit 1900 or 2000. These are idiots. Do not listen to them. They don't know what they're talking about because that's COMEX. We know COMEX is price fixed. We know guys from JP Morgan have been convicted of price fixing it. The U.S. doesn't like gold because they want to be in charge of it. Hi, Jay. Yes, sir. Lots of confusion. I hear from crypto guys that the world is shifting to digital currency and crypto will not be the way of the future. Crypto is not money. It's not gold. Nobody's going to use it. I can't go to the Target. I can't go to dinner and use it. But as I've explained on my show, I've went to a barbecue restaurant, handed the guy an ounce of silver, and this guy, he would have taken it. Now, as a friend, he would have taken it, but I didn't want to give it up. But that's real money. So we got to get into real money. So quickly, gold at $17.19 is not the real price of physical gold, which is all we care about. ETFs are COMEX. That's paper gold. They're selling derivatives. They're selling gold they don't own. It's totally illegal, and it's not the real price. So that is the first thing you need to understand. When somebody says gold $17.19 an ounce, it's about 10,000 an ounce. It's just going to be revealed. And that's the problem right now is gold is priced at COMEX. God knows why, because it shouldn't be, but it's not the real physical price. So if you went out and bought what we do now, and what you guys should do is go to the coin store and go buy a bunch of gold and silver as much as you can. I know a lot of my football people, that's what they do. I tell them that you got to own the physical, and it's worth, you're buying a $10,000 an ounce coin for $1,800. Silver is going to be roughly about $5,000, which you can get for $23. So if you just understand that the physical price is not the paper price. The paper price is delusional. It's a fantasy. It's not the real price. It's a fixed price to keep it down because now here's what's happening. If you understand monopolies is there's no competition. So if I want to open up my Canadian club store, which I love so much, I want to open this up. I don't want any competition. Then I can mark this whatever I want to. I can mark it $100 a bottle. Go find it somewhere else. You can't because that's what a monopoly is. Who has a monopoly on printing money? The U.S. Treasury. The government is the only one that can print money. Therefore, they don't want you in gold and silver. They want you to buy money. That's really the whole flux of it. But what they aren't realizing is China and Russia. China has 23,000 tons. Russia's got about 15,000 tons of gold. India is right up there. Obviously, South Africa with the Kugaran, and then Saudi Arabia is using oil money. Well, what we're doing is we're giving them gold cheaply because they go and buy it at 1,800 and laugh all the way to the bank. You know how much gold the U.S. has? Zero. They supposedly have 8,000 tons. That's not real. They've gotten rid of it. Canada, 0. England, 0. What the hell are these people thinking? So these people are going to go to my next subject, which is the differentiation of Keynes versus Austrian. And I'm going to get into that because I think it's important that you understand what is going on and why. So the gold price of 1719 is a fantasy. Now we'll get into the Dow. The Dow is a stock exchange. It's down 100 points at 30,212. It's really maybe 20,000, which then gets you into inflation. So why is the stock market, why did it go up the last few days? It's ridiculous because what happens in inflation is the dollar gets devalued and it becomes worth less. So things really don't cost more. It just takes more dollars to buy it. So when you're looking at why does it take more dollars to buy it, what's going to happen to companies? So my cost for the Canadian Club went from $20 to $30. Well, I want to make my 20% markup, so I got to charge $50 for it. Excuse me. Don't they know I'm doing a show? So even though my cost went up, can I pass it on to the customer? Mostly no, because now the customer's got less money. If they're using US dollars, they have less money. And therefore, because they have less money, they have they can't go pay more for it. They're not going to pay $100 for the Canadian Club when they can afford 50. That's what happens. So if Toyota is selling the Camry for 30,000 because their cost went up, do you think they're going to get the 30? Who has 30,000 for one? You have less money. You're not buying a car now at higher interest rates. If you own stock in Toyota, Ford, GM, sell it immediately because it's how can it go up? How can profits rise? Profits rise by sales going up. Who's running out to buy a car? You should have been buying the car at the 0%. I did. That's when you buy the car. When the interest rates go up to 4 or 5%, all an interest rate is the cost of money. You don't. Why would you pay more for it? So everybody should have bought at 0, and now it's 5-6%. I wouldn't be buying a car at all. Maybe a lease if you really need one, but I would never buy one now. So if the interest rates are higher, the cost of money is higher. So if we get into, and I'm sorry, as the thought comes, I go with the thought. When the Fed raises these Fed funds rates to stop inflation, which doesn't work, they make money cost more. And you can see it in the world, India, China, Japan, the UK, Italy, Germany, the Euro countries are all going broke because they have US dollars as debt. Now the interest rate went up and we're saying, oh, well, you're paying us, we'll keep it simple. You borrowed $1,000, Germany, you have $1,000 of US dollars at 2%. Now we're going to charge you 5% or whatever it is now. And they can't afford it. They can't. So now it's going to cost them 120 or 130. Well, if they've got $1 billion in US dollars times now this higher interest rate, they can't afford it because you can't just print money. Printing money makes it worthless. So the more you print, the less it's worth. Look at 1930 Germany when they were wallpapering their walls with Deutschmarks because they had no value. So that's what you have. This is all coming out of my master's class at Walsh College. It's a business college here in Detroit. So this is everything I learned, but I want to throw it out there. So that's what's happening. So when they raise interest rates, inflation is not 8%, it's 20% because, well, if we don't include food and we don't include rent going up, if we don't count those, it's really 8%. Well, you got to count housing and you got to count food, so it's really about 20%. That's like, well, we won't count the fourth quarter of the football game, so really we'll just count the first 3 quarters, and it was 20-10 then, and they played the fourth quarter and it ended 40-10, but we won't count those 20 points, and that's about what they're doing. So what's happening is, as they raise interest rates, it's not going to affect inflation. Is strictly you're printing more money, you make it worth less because there's too much of it, right? When you go to the grocery store and there's a sale on oranges, it's because they've got a million of them, and before they go bad, they're trying to sell them, so they make it from $1 to 50 cents, and then you buy 10 of them instead of 5 because you go, oh wow, they're on sale. Well, that's what money is, right? If you printed too much, it loses its value and it goes on sale. So what the Fed's trying to do is raise interest rates with the thought you'll bring the money back into the bank. Nobody's bringing their money back into the bank. First of all, you don't want to hold money. It's not an asset, and the banks are going to close on you. You're not going to get your money out. You're not getting interest to do it. The reason it worked in the 80s because they raised it to 20%. So people then said, oh, and they didn't have the debt they have now. So they said, oh, I'll put my money back in the bank and I'll get 20% on it. And that's what happened. Nobody's putting their money back in the bank for 3% of an inflated dollar. So if you put 100,000 in the bank, in 2 years, it's worth 70,000 and you've gotten what, 2.5%, 3% on it. So what they're doing doesn't work, but what they're doing is causing a lot of pain. It makes things go up. And now it really doesn't affect when the Fed funds, when they raise the rate, doesn't really affect mortgages and cars. That's done by the inflation. Really raising the rate should lower those because it says, look, we're going to combat inflation. You'll get paid back in inflated dollars. So again, that's really got nothing to do with if the Fed funds, if the Federal Reserve raises rates 0.5 point, doesn't raise mortgages, it actually should lower them because it's a whole different, one's charging for money, the other is, I want to make sure I get paid back in the proper amount. So let's quickly look at what is money, and then that'll answer the Bitcoin question. There are 5 things that make money money as a medium of exchange, which means I'll accept that you can go to the grocery store and you can pay me in this as opposed to pens and pencils, right? I can't go to Myers or Target and pay with this, but I can pay with money. Money is the medium of exchange. So people will accept that in lieu of goods that I bought. So quantities, the 5 things of the medium of exchange of money is it's portable, it's scarce, so it keeps the value because they don't print too much of it, which is happening now. Overabundance loses value. That's what they're doing now. Divisible for small exchanges, so you can buy $5 or $100. Fungible, everything is the same, replaceable. And acceptance, most marketable commodity, and then it's durable. That's why gold is a medium of exchange and Bitcoin is not. Bitcoin is really not portable. I mean, it's electric, so I got to take my computer or my cell phone and somehow pay Target. Scarce, I don't know, it's 21 million. If it has 21 million, that's what they say, scarce. Is it divisible for small exchanges? I don't know. I don't have Bitcoin. It's 20,000 an ounce. Does that make it? How do I buy, gum? I got 1 ounce. What do I divide it out? Is it acceptance? No. Is it fungible? Is everything the same? I don't know. Is it durable? Not really. It's not anything. It's not an asset. Value depends on judgment. Money's the most marketable security. The market decides that money is marketable in value. So the market is the one deciding Bitcoin or not. The functions of money is a medium of exchange. Work for money to buy food. So when you go to work, you get paid in money as opposed to apples or pineapples. Store of purchasing power spent over time. And a unit of account, measurement of account, common denominator, made or lost money. So I don't want to get too technical with you, but basically that's money, that's gold. And that's the difference between Bitcoin, which is not an asset, which is not a lot of these functions, versus gold and silver, which are really money. And then they print this fiat money, which is government money, which they overvalue, they overprint it. So an overabundance loses value. That's really what inflation is. So let's see. Types of money, basically, there's gold and there's silver. That's actual currency. Um, Money substitutes are the fiduciary money, or what the banks make, and the fiat money is what the government makes. So that's basically what we have is the government printing money. Okay, it's fine as an acceptance, but it's not an asset. And if they print too much, it doesn't have value, which is what inflation is. So that's what they're doing. They're printing too much, which is robbing. It's robbing the value of the currency. That's why when I say buy gold and silver, because not only is it real money, but you're not going to lose the value. And when I tell you to buy gold and silver, you're losing value because they're overprinting it. So the more they make, the less the value of the fiat currency is. It's not an asset. And as your value drops, well, what do you need instead? Real assets. So you can go buy your Tom Brady cards or your Montana cards, or gold and silver, or a painting, or something real. Now, normally a house would be okay. It is an asset, but it's not. What are you going to do with it? Okay, I'm going to sell my house. And then what am I going to get? Fiat currency? Do I want it? It's worth nothing. As it drops, I'm not going to have a value left. So I don't really want a house isn't really the answer. Now, the reason people say real estate, again, it's not the land. Okay, the land, it's all location, right? So if you put it next to Caesar's Palace in 1969, that's probably a good investment. If you put it 5 miles away from the Strip in Vegas, you got sand. It's probably not a good investment unless you build a golf course or a house on it, or a supermarket or something like that. But are you going to be able to do that? So really what they say, the real estate, you're really buying a house, which again is location. If you're in a good neighborhood versus what if you're in a bad neighborhood or a dangerous neighborhood, there's no value. So you got to be careful. Just buying a house is not the answer, which then leads you to gold and silver, which as the value drops. So what will eventually happen is gold and silver are going to go way up once we get off of this COMEX fantasy. So realize gold's not $1,700, silver's not $20 an ounce. Realize it's about 10 to 20,000 and roughly 5,000. Let's say 2 to 5,000 for the ounce of silver. So when you go into the store, you're going, geez, I'm getting this silver that's $2,000 for $23. How many can I buy? I mean, this is like a no-brainer. And it will go there because as the money loses value, people own a house. They're not going to want fiat currency, right? Then they're going to need money. So they're going to start selling their things to get money to pay for everything because the values are dropping. People don't understand this. That's what I am doing here. So I will talk to people and they give me this blank look. Oh, no, I'll be fine. And I'm like, no, the value of this fiat currency, they're printing too much. It's losing its value. So even if you own the house, it's in dollars. When the dollar is worth zero and you got a $500,000 house, what do you got? You got nothing. So you will have some value because what you're going to do is take gold and silver for it. You say, well, give me an ounce of gold. I know that's valuable and it's really scarce, and you can break it into littler pieces. So I'm going to take gold for it. So our gold that we're going to buy, that I own and you're going to own, or you're going to get silver, is going to buy you a house. It's going to buy you a car because of people won't want money. That's what knocked the Romans out. They deflated their dollars. They took all the gold out of it. So Rome grew because they had coins that were gold and silver. Why did Rome die? Because they took all the gold and silver out of the coins and made them copper. How do you pay your army? In gold. What happens when you don't have gold to pay them? Bye-bye, because they work for gold. They're mercenaries. They're not gung-ho. I mean, they're not people that are in the military for my country. They're people that are in the military for them because they like to fight and they can get paid gold for it. So they fight. Why else are you risking your life? So when you stop paying them in gold, somebody else will. That's how Rome fell. They inflated it. So when I look here, the worst investment for a bank is real estate. What do you mean, Howard? BlackRock buys all these houses? Because it's long term. Savings accounts are short term. Real estate is very risky because it depends on the market and the interest rate and the bank having to sell it. Banks aren't real estate guys. BlackRock will go out of business before they sell all their houses. And then they're trying to get 10 grand or for a month for a house. Well, who's going to give them rent? And then, but they still have costs because you got to pay property taxes. You got to pay maintenance to keep it going. You got to mow the lawn. You got to heat it in the cold and air condition it in the warm. So there's a lot of costs, and they're not going to get 10 grand because people's money is it'll take more to buy gas and buy food and all that stuff. So that's what will happen to the banks. That's why the buying real estate is not their thing. That they are a bank. They are dealing with money. All right. Let's not get too much. Okay. All right, when we talk about the real rate of interest, if the interest rate's 8% and the inflation rate is 6%, the real rate is 2%. What now is happening is the interest rate's 3%, inflation rate's, let's say 15%, the real rate's a negative 12%. I've heard idiots on YouTube say, well, the real rate's positive now because, then they try to say, well, inflation's really not 8%. It's what are prices? And if prices are going up, that's inflation. If they're going up because of the money supply, then that's inflation. If they go up because Apple made an iPhone and it's $200 and then people want it, drives the price up to $500, that's not inflation. That's just a good product that people, the supply and demand aren't equal. There's not enough supply to make demand, so the price goes up. So in economics, if I want, I'll use Canadian Club. If I want this and there's only 50 bottles, but there's 75 people who want it, I can raise the price because the 75 people will fight over it. However, if I have 100 bottles and only 75 people, I have to lower the price. So you're trying to get to the right price for the right demand. And that's what you're trying to do. So anything that you're selling, if it's based on that, it's not inflation, right? I got 100 people that want 75 bottles. I raise my price. That is good marketing. It's good business. It's that's the market, and therefore it's not inflation. Inflation is when, broccoli goes from $1 to $2, but demand hasn't gone with it. Then that is based on inflation. You've hurt the money. It now takes more dollars to buy it, and that's what we're in the middle of. So again, your basic way out is real assets, which is really gold and silver. And the more they hit down, the more they print, then it just takes more money. Now, the other thing happening is Russia, China, and the BRICS country. What are the BRICS countries? The BRICS countries are Russia, China, India, Saudi Arabia, South Africa, Iran, Iraq, Brazil, Argentina, all of the people that aren't crazy about America. They want to get out of the US dollar. So it's basically saying, I don't want to use the US dollar anymore. We'll come out with our own currency and ignore the US dollar because we see you do sanctions and you inflate. It makes it worth less. And you raise interest rates. So what do? If Powell raises interest rates, it affects the euro. It affects the yuan. It's making the yen go broke. It's making the rupee in India go broke. Us are controlling their economies. They don't want that anymore. Do you realize if you have a Japanese yen and you want to buy a euro, you have to take your yen and buy US dollars, and I'm sure there's a fee, and then you have to turn your US dollars into the euro. You can't just buy euro with yen. What a scam that is, right? So you're paying, let's say, 10% to turn it to US and 10% to turn it to euro. What is that? That's not good business. So what all these countries are getting pissed off about is now he's raising rates. They don't want anything to do with the dollar. They want to get out of the US dollar. They realize that the Fed is printing and printing and printing. And so what's happening is these countries are saying, okay, we've had enough of this. Plus, you could sanction us. So they are making a dollar, whatever it is, a yuan, a ruble, just a mixed dollar for all these countries, backed by gold. Why would you back it by gold? I mean, can't you just have a dollar? No, you can't just have a dollar. You need an anchor to it. So they're putting gold on board saying this dollar is worth so much gold. And the price of gold is going to go through the roof. That's what's really breaking COMEX is the demand for gold and the demand to get out of the US dollar. But you can't just print your own. You can't just have yen. You can see the yen's $145. It's gone. The euro's gone. The UK is gone. So all these currencies, they're printing and printing and printing. They're gone. And so their only way out is to get off the US dollar and stop playing this bullshit game of, oh, we got to exchange our money for dollars to buy. So if I got euros and I want to buy Swiss francs, I got to go to US dollars and then buy Swiss francs. Me and you, we can just go. I've been to Switzerland, and you just go and you use your ATM to give me 500 Swiss francs, and you get 500 Swiss francs because you're paying in US dollar. You don't have to go through the bullshit. But look how many countries there are, and they go through the bullshit. And there's actually it's a very expensive thing to switch your money and then get the new money. So they're coming out with this money backed by gold, which at the end is going to force the U.S. to back their money by gold. Because what would you rather have, gold or not gold? So if you'd rather have gold, which everybody would rather have because you can't inflate it. It's the perfect money. It's the only real money. People ask me who are buying gold, well, how do I get rid of it? Are you kidding? First of all, it's money. So how would you get rid of a euro or a ruble or a yen? How would you get rid of it? Maybe you go to the bank. Maybe you just throw it in your thing. It's not really a stock. You're not buying gold because it's 2,000 to get to 20, but because it's been suppressed, then it's exactly, we're getting a double kick. One, we know our US dollar is going to zero. So instead of just sitting there with 100 grand going, oh, geez, I just lost 100 grand because these idiots printed, you can get out. You can go to gold and silver. So you're going to get the double kick. The gold and silver is going to go up. So your $1,800 gold, for example, well, let's use silver. It's even better. So your $23 silver that you go to this coin store that I show you on my videos, you buy for $23. It's going to go to $2,000. That's the kick of being held down by COMEX and the price fixing and the JP Morgan guys who are going to jail for price fixing. So that's really because they've suppressed the price. It's only 23. So you're going to get 2,000 for it. But once you get to the 2,000, it might go to 5 or 10. But once you get there, it's really, that's it. It's not really an investment after that point. It's not a stock. Oh, they had earnings. It's supply and demand. What does that mean? Okay, there's 100 bottles. There's 500 people that want it. That's supply and demand. That means demand says, I have more people who want it than you've made it. So you can raise the price, but you're going to sell your 100 bottles because you got 500 people that want it, which means in gold and silver terms, you have more people that want gold and silver than there is gold and silver. You have all of Asia who wants gold and silver. You've got the Russians, you got the Indians, you've got the South Africans. Now they have the Cougaran. And that now it doesn't matter what you buy. American Eagles, Cougaran, Maple Leafs, it doesn't matter. You're buying an ounce of gold. You're not buying it for the value of the dollar. Like mine will say it's worth $100 US, $50. It's a $50 gold piece. I'm not buying it for the $50. I'm buying it because the ounce of gold is 2,000 going to 20,000. So it's a double kicker. You're going to get the 20 on it, but it's going to save you from losing all your money. It's like a triple threat. You're not going to lose your money in US dollars or go to the bank. They won't give it to you, or the bank closes down, which has happened in China. And I think I've shown you those videos. I'll show it to you again. So the people in China tried to go to the bank. The banks were closed, wouldn't let them in, couldn't get their money. This is a month ago. So don't tell me it can't happen. It's happening. And who do you think's running here? The Chinese are running the US. So that's we're just going off of their playbook. So that gets you to what's happening. Do you go to Bitcoin? As I've explained, Bitcoin's not an asset. Bitcoin's it cannot replace gold or silver because you don't have anything physical. What if you lose power? How do you get it? I have gold in my hand. Can't replace that. What if you lose your password? You don't know what it is. You can't get to your Bitcoin. But it's not an asset. It's not easily, and it's not acceptable. I can't go to Target, order a restaurant, and say I'm going to pay you in Bitcoin. Can't buy a car with it, but you could buy a car with gold. Believe me, when gold goes through the roof and I can go to Toyota and say, yeah, I'd like to buy this Camry, I'll give you an ounce of gold. The guy will be like, thank you. Thank you for buying it with gold, because it's real money, but Bitcoin isn't, right? So I said, I'll give you a Bitcoin. He'd look at me like, I don't want it, because I don't know what the price of the Bitcoin is, but I know gold is gold. So that's what's going to happen. So you're going to get a triple option. You're getting out of deflating dollars because these clowns are printing and printing and printing, and they can't stop printing. And with the debt, they're making it so expensive for the debt, the whole system's going to collapse, and it already is. I can't believe anybody's in stocks. Please sell your stocks. I'm begging you. Sell your stocks. They're not going to go up. It's got to come down because earnings are going to drop. It has to, because costs went up. If costs go up and your salary didn't go up, how are you going to afford more? You're not going to buy a car. You're probably not going to go on that trip. You're probably not going to buy anything fancy unless you're Bill Gates. You don't have the money. If you're the average person who makes $100,000, you don't have extra money. You're like, how am I going to pay my rent? Am I even going to keep my job? Because they're going to start laying off people. So you're going to need, I'm going to make my money on gold and silver. That'll keep me alive, which is what I'm doing. And then it's a matter of the dollar dropping, not being able to get it out of the bank. So let's say you got $100,000, you go, okay, give me my money out of the bank. They don't have $100,000 for you. They don't have any money for you. Just what they happen to have in the bank, and based on who comes in that day. So if you got $100,000 in the bank, they might say, well, we have enough for giving you 10,000. So they give you 10,000 because that's what they happen to have in their inventory. They don't have your $100,000 in the bank. So you take your $10,000. Now you got 90 in the bank that you can't get to. And then what do you do with it? So then you go buy gold or silver, or what are you going to buy? A house at a very high rate, at a very high interest rate. So you're going to overpay quite a bit. What else can you buy? Okay, I'll buy a Brady rookie card or a Joe Montana rookie card. Okay, that'll hold its value. That's a real asset. Maybe I buy diamonds. Maybe I buy a painting that I know's good quality I can sell, a Van Gogh, a Picasso. That'll work. I can't buy a regular painting. Nobody will want it. So that's what you're trying to do. So not only that, but because the price is suppressed. Now what's happened is, with all these countries buying the cheap gold, when gold hits, who's going to have, as they say, those with the gold make the rules. We are going to be a Chinese, Russian, India. It's going to be the powers in the U.S. going to have nothing, because our value will be nothing. Nobody will want the dollar. So, and we're not going to be the current. Now it's happening. It's not a matter of, well, we don't want it to happen. It's a matter of, it is happening. It's happening now. The Russian and Chinese have this currency out, backed by gold. It's out. And JP Morgan's been arrested for price fixing. It's on I have a clip if you want it, or I have the thing. And then you have, so you get out of it by going to gold and silver, and then all the other countries. But the problem is, when gold hits 10,000 and China and Russia have all the gold, then we got to learn to speak China and Russia, because we won't have money. We won't have a military anymore, because how do we pay our army? So eventually The only way U.S. is going to survive is they're going to have the gold standard back. So they're going to have to back their dollars with gold to keep value. Otherwise, it goes to zero. And I read you that Zimbabwe's doing this. Zimbabwe has like 2,000% inflation. I mean, they're broke. They're out. Look at Sri Lanka. Look what happened to Greece. And basically, they said, oh, you can buy a gold coin. But the problem is they're only got gold ounces, which is $1,800. They're not selling in incrementals or silver, unfortunately. So who has 1,800 there to buy the gold ounce? But the gold ounce is accepted. But that's what eventually will happen. Buy silver too, because it'll help you on your smaller purchases. Because gold hits, let's say 20, 30,000 an ounce. Well, you better have some quarter ounces or a way to, get smaller amounts. So that's where silver comes in. Silver being about 5,000 an ounce. See, and eventually it won't be in dollars anymore. It'll just be, I can buy a house with this ounce of gold. I can buy a car with this ounce of silver. I can go to the grocery store with this ounce of silver and get, they'll have to work out how they'll pay us. Like now, it's the dollar. There's 100. There's a 50. There's a 20. There's a 10, a 5, a 1. So you can basically go to the grocery store, spend $52, give them 100, and they'll give you back change. This digital currency won't work. It's no way it'll work. That'll be fiat money unless they back the digital with gold. So if they don't say they're backing it by gold, there's no difference than what it is now with the debit card, and it'll go out also. So you can't trust that. That's not going to help you. So that's what you have. So if you hold it, you're gonna in a it's not an asset. It's just fiduciary fiat currency. It's just paper. And you're supposed to have faith in the government, but that faith that holds the dollar is going to go away. There won't be demand. Nobody wants it. Already the BRICS countries don't even want. Putin won't even take it. Neither will the Chinese. Yes, we do trade with the Chinese, but they're not going to want U.S. dollars, which is also going to force us on the gold standards. That's where we're headed, which makes the ounce of gold $50,000, $60,000 an ounce, because you're going to need gold, so you're going to have to raise the price of it, because there's not a lot of gold compared to the dollar. So when you print $10 trillion and divide that by how many ounces of gold, it makes the ounce of gold go through the roof because you've got too many dollars out there. You got to get rid of the dollars. So let's go. I was reading this thing I want to do Keynes. Well, first, the Federal Reserve was run by J.P. Morgan. He's the one that came up with it. So if you ever wonder who owns it, it's J.P. Morgan. And there was something. This is basically my notes. So let's get into inflation. There's what it is. It's the increase in the money supply, which I told you. That's the cause, period. One cause. The effects are decrease in purchasing power, takes more, and the price level goes up because it takes more to buy it. So that's really inflation. Very simple. Not what all these guys who sit around stumbling, oh, prices are up, that's inflation. So when the prices don't go up anymore, that's the end of the inflation. No, you've printed the money. You can't, that's it. You've made from 1,000 to 10,000 $100 bills, you've inflated. So that doesn't matter. Now the price is going down is irrelevant. It's all supply and demand at that point. So if nobody wants my Canadian club, even though my costs go up, if nobody wants to buy it, I got to lower the price because I got to sell it. So even though my costs are up, I might have to go out of business. I was telling this is my barbecue story. I tell the guy with the ribs, he's $29. It used to be 22 for ribs. Now it's 29 or 30. I said to the guy, you can't go to 40. Nobody will buy it because the market will give you 30, but the market's not going to give you 40 for a slab of ribs when we've been paying 22. And the guy says, well, what do I do? I says, well, you either got to buy them cheaper or cut out a couple of ribs or do something else, but you cannot sell it for 40, there won't be demand. Like if I'm selling this for 50, how in the world can I start selling it for 200? Who's going to buy it? I'll pay 50. And when I bought this, it was probably 25 or 30. I'll pay 50 for this. That's fine. But now you want 200. I don't have 200. I didn't get a raise. I have other costs to pay. But if I'm Canadian Club, I had to pay more to produce it. Therefore, what do? Well, to the barbecue place, if you raise it to 40, he said, I'll have to close my doors. I go, exactly. You cannot recover your costs because you can't pass it on to the customer. That's what people think. Well, I'll just charge the customer more. Well, the customer doesn't have any more money, and he's got to pay more for gas and food and everything else. He doesn't have more money to pay you. So you can't just charge 30 grand for a Toyota or $40 for ribs because where are we supposed to get the money? Now, if we do have silver and gold, that'll keep the balance there. So if I paid an ounce of silver for the ribs and the ribs go up, I can still give him an ounce of silver at $40 and he'll still take it because the ounce of silver goes up in accordance with the price. So that's what happens. So the ounce of silver will keep the value. So in US dollar terms, it'll take $40 to buy the slab of ribs. In silver world, the 1 ounce of silver will buy the ribs at 30, will buy the ribs at 40, will buy the ribs at 50. Whatever he wants to charge, my ounce of silver will pay for it. And that's the beauty of it. So let me get to, I was reading some interesting stuff. Now, again, these are all my notes. These are all my notes from my master's program, right? So this was probably the most interesting class I ever had. I've had Keynesian economics classes that are all charts that I don't even know what I'm reading. This is in English, and I just explained inflation to you like that I haven't heard anybody on the freaking YouTube explain it. Let's see. So let me get to, there was some real interesting stuff I was just reading. Let's quickly talk about Adam Smith, the division of labor and productivity, the invisible hand. People should be free to make money by producing what the people want, what the demand. You want a blue shirt? I'm going to make a blue shirt. You want Canadian Club? I'm going to make Canadian Club. By self-interest. Supply goes up, prices drop. It's the best way to spend wealth. The invisible hand is keep government out of it. Let the economy run itself. What is laissez-faire? Leave it alone. That's the simplest definition. Just leave it. Keep government out of the way. Prices will drop. The standard of living goes up with free trade. That, in a very easy, is the invisible hand, is let the market, sell the Canadian Club, whatever you want. The market will determine if they buy it or not, right? Well, we have enough buyers at this price. Laissez-faire is leave the government out of it, leave it alone, and let the market run by. We don't need government interference. We don't need monopolies. We don't need that. Everything like that is terrible. Let's see. These are the 5 things needed to be a financial power. So let's say China and Russia want to be a financial power. The U.S. is, here's what you need: low taxes, free trade, which is the most important, the rule of law, stable money, and good communication. Do we have low taxes? Not anymore. Do we have free trade? Not anymore. Do we have a rule of law? Not anymore. Do we have stable money? No. Do we have good communication? No, we're all fighting. But this is what the BRICS nations have to follow if they keep the taxes low and the free trade and law where it's legal. You don't have that in those countries. Stable money and good. So when gold goes up, we're going to go to an island and we're going to have our own country and we're going to follow these 5 things and we'll be the most profitable country and we'll just use gold and silver to make all our payments and we will have the best country in the world. That's exactly what you need to become a financial power. I talk about how to be a good football team a lot. What do you need? You need a good defense. You need a good coach. You need a good quarterback and a balanced offense, and you can be a good football team. And it's the same. So basically, that's what you need to be a financial power. It's critical. But what ends up happening is you get greedy. Somehow we need politicians, which I don't know about. So under the theory, you need a leader. So, but the problem with the leader gets corrupted. He sees all this money and he goes, well, oh, wait, we're on the gold standard. Wait, but I can't steal. But if we have money, fiat money, I can print it. Wink, wink. I'll just print a bunch of money because I can do it. And then the companies come to me and say, here, I'll give you this money and you make me in a monopoly. You keep the competition away. And that's what's happening here. Well, the law, well, that doesn't apply to you. We'll ignore it, or we'll have chief justices, Supreme Court. We'll put people on who will back our side. Well, that's not what the Constitution's about. Stable money. We won't inflate. We'll have gold. In our Constitution, the only real money is gold and silver. Yet they've got fiat money. In our Constitution, you cannot have a central bank because that corrupts everything. It causes inflation. It favors its monopoly. Yeah, we got a Federal Reserve. If I'm president, I'm back on gold and silver. I am working for people, not for me. No more if you're monopoly. If you're a monopoly, you're gone. No more. Back to gold and silver, no more inflation, no central bank, back to the Constitution as the rule of law and good communication. So that's what's missing, and that's why we get off of it, and that's why every country that's been on it, France, the Netherlands, England, all fuck up because they go and they start printing. And then the other thing they do is they go to war. Why do you go to fucking war? What is the point of the war? You've got everything here. You've got the gold. You've got the free trade. You've got stable currency. You don't have inflation. Why are you at war? What business of ours is these other countries, Afghanistan? Why are we there? Protecting? No. That's their war. That's their business. Let them follow this. You'll never have war. You'll never have racism. You'll never have anything if you stick to this and stick to free markets. So in a free market, I own a grocery store. I don't care what color or what religion or anything about the person who comes in, as long as he pays. That's all I care about. Just like Teaserking. I don't know who you are as far as your color, your religion, anything about you other than you pay me and you get football picks. It's as simple as that. I don't care. I'm not a racist. I just want to help make you money. And then when you make your money, I want you to buy gold and silver with it to protect yourself. Now you got money, go buy the gold and silver. Most of my customers ask me, where do I buy? And a lot of them will buy silver because gold's expensive. But the difference is gold's going to go from 1,800 to 50,000. Silver will go from 23 to about 3,000 or 4,000. That's the difference. So if you really want to make a lot, you buy gold. Gold's more to buy a house. Maybe you buy a Mercedes or Ferrari with gold if you want that kind of stuff. Silver is more your everyday, pays my rent. It goes to the grocery store. I can go to barbecue or Chinese. I can go do these type of things. That's what your silver's for. So you want to get a bunch of, I go and I get a 20-ounce little plastic thing. And I really get offended when these idiots call us stackers. I'm not a stacker. If I got 50,000 in the bank, what am I? A stacker because I have US dollars? I mean, the term doesn't make sense. So I'm offended by that term. It's not stacking, it's intelligence. So I go in and buy a 20-ounce thing. It's a plastic thing full of 21-ounce silver. And I just buy that. And if you get the rounds, if you get like the Buffaloes, they're $23, $24 an ounce. If you get the American Eagles, they're $35 because the government isn't printing them anymore. So there's a shortage, therefore it makes it. But you can buy Maple Leafs or British or any other I just bought a kangaroo 1/2 ounce gold. I didn't care. It's a 1/2 ounce. As long as it says 1/2 ounce gold, 1 ounce silver on it, that's it. So as long as you have that, you're fine. So make sure it says that so you know, oh, it's 1 ounce silver. Because if you try to sell it to me and it doesn't say 1 ounce gold, 1 ounce silver, I won't buy it because I don't know, is it an ounce of gold or an ounce of silver? But if I know, if it says it on there, then that's all I care about. But that's that's the difference. So yeah, you'll make a lot more with the gold and the silver, with the gold than the silver, but the silver will be used. And then it's supposed to be about 15 times to 1. So if an example, if gold's 15,000, silver should be 1,000. Well, what it is now, it's like instead of 1,000, it's like at 50. Well, it's going to go from the 50 to the 1,000. So you're going to get all that push on silver to get up to the 1,000 that it's supposed to be. And I don't even know if it's 15 to 1. It's probably more like 7 or 8 to 1. So with thinking that, then what you do, so you buy a bunch of silver now, and then it goes way up. Then you go and take, I don't know, 5 or 6 ounces and buy gold with it. You can do it like that if you don't have enough for gold right now. And it's hard. You go, it's 1,800. I mean, you buy 5 ounces here, 5 ounces there, you know, unless you're real rich, there goes your money. Now you want to keep money out. So here's the juggling. I want to keep money out so I can pay my bills so I don't have to cash in my gold and silver right now because it's not at the price. When gold hits 50,000, then it's a different story. And then it's not even going to be in gold. It's not even going to be in US dollars. It's going to be in just purchasing power. So we'll get to that. That's the idea and the thought process. As I explained football, why do we take this game? Why do we bet Georgia under? Because they got a great defense and an okay offense. They play low-scoring games, so we keep betting them under because the line's good. You get the full explanation of why, and then you can make up your own decision. Does it make sense or not? But then when we get the result, like last week, what was our lock? Iowa under because they have a great defense and no offense. Michigan with a good defense. And Georgia under. They were playing Missouri. They played a 48. The over-under was 60. So, okay, it's a good thought, but does it turn into reality? Yes, it did. The bet won. So we won with that logic. So if you carry it through, yes, look at the result was positive, then it makes sense. That's what I'm telling you here. So let me get to what I want to get to. If anybody wants my notes or notes on the trade cycle, I have the 11 steps of the trade cycle. I'll be happy to send it to you or answer any question. Did you know that J.P. Morgan bought and put up the presidents from New York? And then did you know that J.P. Rockefeller put up the presidents from Ohio? So these are all fixed elections. Well, it's not fixed elections, but Morgan was in charge, was responsible for Theodore Roosevelt and Woodrow Wilson, and Rockefeller was responsible for Taft. So these guys are the puppet masters of the presidents. So don't ever think the president is in charge of anything. They are being run by money. So it's the Morgan, J.P. Morgans and the Rockefellers. What did Morgan want? He wanted antitrust laws, potential entrepreneurial cartels, business wants protection. So he had all these businesses. He didn't want competition. He elects the president. The president then says, okay, we're gonna protect these people. And that's really what happened with the all the intervention that comes in now and all the what do you call them, PAC money and all this bullshit. So it's now become all fraud where everything's bought and paid for. We're on the gold standard from 1879 to 1914. It was the most prosperous time of any country in the history of the world. 1914, we go to the central bank. There goes the inflation. There goes the gold. There goes the prosperity. Now we're fucked. So let's see. So 1913 and forward, a big change in the U.S. U.S. government starts intervening. So they're telling you how to run your business, protecting the bigger companies so they don't have competition. This is all about competition. Competition, there's Canadian Club, and then there's Crown Royal. So you have choices. They have to price fight themselves to get the price down where we'll buy it. So they're catering to us. We then are the market, and we go, okay, I'll pay $50 for that. I prefer this over Crown Royal. I prefer Coke over Pepsi based on the price. One goes on sale, I buy that if I care about one or the other. 1914, the end of classical liberalism, start of intervention. So you went from free market, everything out what I just explained, to intervention. The government saying, okay, give us taxes, and the government's going to get in your way and interfere with you. WW1, nobody won World War I. Every problem gets tracked back to World War I in the 20th century. The cause of the war, I'll share this. This is very interesting. The Russians killed the Archbishop of Austria because they wanted a warm weather seaport. So Russia, again, causes that. And the Black Hand, the mafia, the alliance with Russia. And so it's all, again, the mafia causing problems. Let's go. I was just reading. This is an interesting one. J.P. Morgan's responsible for the U.S. to enter the war in 1914. The chief supplier to both sides, agriculture booms, copper, minerals, manufactures war material. J.P. Morgan, this is like, what's the movie? Sherlock Holmes 2. Where Moriarty wants the war because he's going to sell them. He's going to sell both sides the arms and the bullets. That's what J.P. Morgan did in 1914. He got us in the war so he could sell guns and bullets to both sides. Unbelievable. Morgan's the propaganda guy. He owned 25 newspapers. Morgan buys all war material for France and England. Let's see. Morgan liquidates Britain, sells stocks, private loans through Morgan. So Morgan makes out like a bandit, but he fucks the whole world over. Let's see. Then you got the Russian Revolution. This is very interesting because you find out what's really going on. 1920, Harding's the president. We return to normalcy. He puts in lower taxes, cuts government spending, deregulates the economy, or gets the regulations out, hands off, and restores the gold standard. So it's very simple. Harding comes in 1920. He does all this. We have the Roaring '20s. Now, it's not a coincidence that when you follow the rule book, what happens, right? It's very, very simple. But then what happens later in the 20s? This is the start of the Depressions, 1922. Easy money. Does that sound familiar? Starts the Great Depression in a sense. Low interest rates to farmers. Banks lend out money to foreign credit. Stabilization policy. The prices fall. The Fed prints money to stabilize prices, to fend off competition. This sets up the trade cycle. To save England, starting unions never lowered tax rates. Fed lowered interest rates to save England after World War I. Here comes the Depression. What are they doing? Printing a lot of money, low interest rates. What are they doing now? Printing a lot of money, low interest rates. The Fed inflates in 1922, 24, 27, inflates the economy to keep the boom going. So they're printing money to keep the economy strong instead of letting it go through its normal cycle. Does that sound familiar? 2008, the housing crisis, let it blow up. Nope, we're going to keep it pumped up. And they don't let the housing drop to market. They're avoiding the market at all costs. That's what's going on now. And it's finally at the point where we're all fucked. Germany, hyperinflation. What is hyperinflation? Hyperinflation is when you print money and then people get scared and they go and say, you know what, I'm going to go buy tuna and I'm going to go buy food now before the price goes up. That's hyperinflation. It's fear. Oh my God, give me money, let me buy goods. Give me money, then you're spending it, and then there goes, that's hyperinflation. Buy American Bank, lend Germany gold to go on gold standard, to collect on the debt from the road. Let's see. 1924 to 28, boom in Germany. And then we know what happens. It's a house of cards built on free credit. We want it based on productivity. You build an iPod or a Canadian club or a car, and that makes the economy grow. That's good. When you do it on bullshit credit that isn't anything, that's bad for the economy and it will collapse. So 22, 24, 27, increase in the money supply to say Britain, 27 to 29, boom in stock prices. Does that sound like anything we know about? Then here comes the biggest mistake in the history of the U.S., the Smoot-Hawley Tariff Act, 1929, handouts, trade implosion, and causes the Great Depression. What's a tariff act? It's an increase in taxes. So if Germany wants to send us product, send us Mercedes, we tax them on it. So it drives prices up. What's happening now? Inflation. What's it doing? Driving prices up. That is not a good thing. This will not be a happy ending. 1929, the stock market crash. November 29 till April 30th, the market regained 2/3 of its losses. Then the Smoot-Hawley Tariff Act causes the depression. So everything's starting to get normal, and then they do this Tariff Act. Germany and Japan need world trade because they don't have any economic resources. They have to import everything, right? So if they can't grow, there's no material for them, so they got to buy everything. Tariffs hurt them the most. The war party comes to power in Japan and Germany, and we all know who that was. The autocracy is Hitler. Germany should stand alone. We don't need anybody. Smoot-Hawley, first of the major reasons of World War II, hurt agriculture industry. They cannot export because of the higher prices. Then they glut and prices drop in the U.S. 30% of banking disappears in 1929 and 30 because they're agriculture banks, so they only deal with farms, but they can't sell to Germany and Japan, so they're stuck with all this extra food. More depressions or recessions. The Fed will print more money. Commercial banks, short-term notes stay liquid. Those are saved. The long-term banks fail. And then, as I talked about good economies, here's what happens in the New Deal in 1929 and 30. They raise tariffs or taxes. They raise government spending. They reflate the economy, inflation. They raise taxes, keep wages up for unemployment. They're all worried about unemployment, which I will explain very soon. Bank of the U.S. crashes, specialized in home equity loans. So, basically we caused World War II. Unbelievable. 1931, Britain goes off of the gold standard to pay for the war. They need money. 1932, U.S. goes off the gold standard. Reflation. Try to inflate. Agreement in France to let Germany out of their war debts. Both parties get conservative, Democrats, Republicans. Let's see. So I don't want to get too much into that, but that's kind of the history of what really happens. FDR was a great salesman and no substance. He was not a good president, even though everybody thinks he was, because they think he ended the Depression, and he created it to go 10 years instead of being over in 1930. If they don't do the Smoot-Hawley Tariff Act, it ends in 1930. He makes it go to 1940 with this stupid thing. Why did Germany and Japan go to war? Smoot-Hawley Tariff and London Economic Conference failure. Okay, finally to Keynes. This is 7/14/1993. Keynes brought in by FDR. The depression caused by underconsumption is what he thinks. He thinks saving's bad. He doesn't want people to save. That's why he lowers interest rates. Producing more than you're consuming, wants to tax the rich, which is the exact worst thing you can do. 1939 tax and spending spree by government. The New Deal is heavy progressive income taxes, high inheritance tax, excess. So he's taxing everybody to death to give the money to the government. He's basically a socialist. Keynes is protectionist, worried about unemployment. Wages are rigid downward. Monopolies, tariffs, and unions, which are all bad. Monetarily, he wants to increase the demand. This doesn't work. This is inflationary. You can't print money by monetary policies and fiscal policies. So the monetary policy was increase the money. The fiscal policy to stimulate the economy was government spending. Government spending doesn't increase anything. It doesn't, because it's government building roads. There's no market. There's no who's paying for it. We are with taxes. Doesn't work. Keynes doesn't work. Let's see. That's basically the problem with Keynesians. I just taught you Austrian economics, which is free market, the 5 functions of government, good sound money, good laws, gold standard, let the people run the market is Austrian economics. Laissez-faire, hands off, let them work themselves, because we can't read their minds. We don't know he wants a blue shirt or a green shirt or a pen or Canadian club. The government doesn't know that. The market does. So if they let us do the market, it works. Austrian economics is proven to work. Keynesian economics is we're going to tax them. We'll take the money and we'll figure out what's best for them. We're going to make them all poor. We won't allow savings. And the point is we'll have no unemployment because we want everybody to work. We don't want them to save. We want them to work and spend, because then they spend, you don't know how we want to spend. Maybe we don't want. Maybe we want to save and we want to go on a vacation or buy a house, buy a car. Why does Japan go to war? Because of the oil embargo. So there's an oil embargo. Okay, so let's really dissect FDR for a quick second. 1940, FDR declares an economic embargo on Japan. This caused Japan to go to war. July 1941, oil and steel embargo on Japan, just like we did with Russia. And we see how good that's working. Russia right now, where we're not letting them deal with us. FDR won't negotiate. He pushes Japan into World War II. November 26, 41, Japan goes to war against the U.S. We all know what happened on December 7th, 1941, which was Pearl Harbor. FDR knows Pearl Harbor will happen. Can you freaking believe this? He lets it happen. He knows, and he doesn't tell anybody in Hawaii. He knows the Japanese are going to invade. He deliberately didn't tell them. Can you freaking believe this? This is the leader letting these people get killed, getting Japan to Pearl Harbor so we can get into the war. Can you freaking believe this? I mean, when I was in class and I heard it, I was pissed enough, but this is fact. This is not my opinion. This is coming from my teacher at a business college, right? This is what he's teaching. This is what he knows for facts. Japan went to war because of the oil embargo. Thrilling. Hitler, wallpaper hanger, murderer, Nazi, nationalist, socialist party. This is a socialist. This is not right wing. It's a socialist government. Racist, socialist, autocrat, 30% unemployment. Jews are the scapegoat. Hitler takes over Austria, Czechoslovakia, then divides. France, the largest army at the time, did nothing. Britain, the largest navy, did nothing. This could have all been avoided. There was one thing I read that this never needed to happen. Where did I read that? just read it yesterday, and it kind of blew my mind. So basically, this whole war, I think it was J.P. Morgan for World War II, could have been avoided, but they didn't want it to not. He wanted to make money on the weapon. So we kill 100 million people because J.P. Morgan's got to make money on the weapon. Let me read that to you if I can find it. I'll get back to that. Germany invades Russia. We all know Bretton Woods is formed. It's form of the gold standard in 1945 after the war. We try to go on the gold standard. Keynes wants a worldwide currency, and the U.S. wants the gold standard. So again, Keynes is some crazy guy who wants one currency for the whole world, which doesn't work unless it's gold. Then gold would be the only currency that could work. In 1947, GATT, which is a General Agreement of Trade and Tariffs, is put in place. At this point, a bunch of old men take over as leaders of all the worlds, of all the countries. It's determined that, like England, Spain, France, they need a king to rule them. MacArthur writes the Japanese Constitution, allows no armed forces. You cannot ever have armed forces again. Let's see, where is that interesting thing? Korean War, Japan, Europe, Britain. So then you start seeing what's happening. In 1947, Italy puts in a market economy, and it becomes this part I love. They put in this De Gasperi, who opposes Mussolini. He goes to a market economy, and it becomes like one of the strongest economies in the world. 1948, West Germany brings in Andauer. Erhard was an Austrian economist and makes Germany the second largest economy, free trade, gold standard, free markets, privatization, lower taxes. So it's a coincidence that every time these countries do this, all of a sudden they're the most, we got Italy number one, we got Germany 2 or 3. The German economic miracle is called. No, it's just Austrian economics. 1955, what does France do? The same freaking thing. De Gaulle's the leader. France economy improves drastically. So let's see. Italy does it. Germany does it. France does it. I think Japan does it. And all of a sudden, their economies somehow go through the roof. I think it works. 1945, Britain went the opposite way of Erhard. They went socialist. Their economy went in the tank until 1980, and now they're back being socialist. And you can see 2 problems: class society and labor problem. So all the countries that do Austrian economics flourish. England doesn't and goes in the toilet. We know Russia didn't. Let's see. I don't want to get too political. The idiot Nixon extends the entitlement programs, which are giving away free money. Paid for the war by inflating, goes off gold in 1971 because he wants to pay for the war. As we've just discussed, the more you print, the less it's worth. So he's printing money to pay for the war. It doesn't work. It causes inflation. What's happening today? They're printing money to pay for all this bullshit, COVID and all the other stuff. They're printing. You got inflation. Now, here's an interesting comment. Ford, 74 to 77, ends inflation, or maybe he wants to. He reduces the interest rate. He realizes he has to pay for the entitlement programs. That's why he reduces the interest rate. definition of stagflation, which we hear a lot, but nobody knows what it is. Well, here's what it is. It's high inflation and high unemployment, which is normal if you think about it. If you have high inflation, costs are up, people can't afford, the businesses then have to lay off because, okay, this is $40, but I can't sell it for 100. So what do? I got to lay off people because I got to still make this stuff. I got to sell it for 50. I'm not making a lot of money, but I'm still paying my workers. So I'm going to lay them off because it's either lay them off or stop making Canadian Club or back to the barbecue restaurant. I either lay people off or I can't sell ribs because it costs me $40, but the market won't let me bear 50. The first rule in free market economy is you have to figure out what it costs you to make a product. What will the market bear it at? So if this costs $10, the market won't pay $10, I can't make it. The market must pay $20 and it costs me 10. I make $10 every mug. Once I can't do that, so if my costs go to 20 and the market says, I'm not paying you 30, you have to stop making this because you're not going to make money, or you can lay off all your people who make it, then you might as well. So you end up closing your doors because the mix of what you used initially to go into business, this will cost me 10, I can sell it to 20, the market will bear 20. It's no longer there. Now it costs me 20, but I can't sell it for 30. So now if I go back and it's going to cost me 20 and the market's 20, I don't make the product. And that's what's going to happen. And that's why we'll have high unemployment, because you're going to have to lay off people because you're not going to be able to, you can't sell a Toyota Camry for $30,000. Nobody's going to buy it. So how do you stay in business? Well, I sell it for 20, but then it costs me, let's say it costs 25. Well, if it costs 25, I can't sell, the market won't bear 30. I got to lay people off because I still have costs. So I got to get my costs down so I don't have to sell it for 30. So I can sell it at 25 and break even. So you 500 people are gone because I can't afford to pay you. That's where we're headed. Reagan does supply side economics, which is Austrian. Tax cuts, gold standard, lowers interest rates, deregulates, balances the budget. Funny how every time anybody does this, it freaking works. Pays for the entitlements by economic growth, not by printing money. That's the secret out of it. It's let the economy grow. Get the hell out of it. The invisible hand, laissez-faire, get away. Let the business, let the market take care of themselves. That's what that's how it happened. There was a part in here. That's Keynesian. Keynesian's a socialist. Why everybody uses Keynesian economics now is beyond me. Why the gold and silver are valued in COMEX is beyond me. I've asked that question. Why isn't there two markets, the physical and the paper? Why aren't there two markets for gold? Why do the stocks use the COMEX? So I have Newmont Mining Gold as a stock, not physical. I own the gold mine, well, whatever. Why is that valued in COMEX? COMEX isn't real. So I think when they revalue it and make the gold in physical amount, because it is physical, it's a gold mine, they have the gold. So once it goes to 20,000 an ounce, what do you think the stock price is going to do? Because now you've got, instead of $1,500 an ounce for thousands of ounces of gold in the mine, it's going to be at $20,000 times 1,000. What do you think their profit's going to be? Plus, it's going to be gold. Thing's going to go through the roof, but you got to wait for it. You can't buy it now. It's down from, I think it hits 82 to it's at 42 now. I'm not buying. I'm waiting to about 25. People will sell not because the stock's bad. They're going to sell for two reasons. One, the stock's going to go bad because, as I stated, the earnings are going to drop because costs go up and all their business models are screwed because they They did the business model 5 years ago when costs were X and there wasn't the inflation and they could sell it at market. Well, not only is your cost up, but the market's different. People have lost money. So I go to the barbecue place. People don't have $30 to buy a slab of ribs. They're going to to Kroger's and Target and Meijer, and they're just buying milk and bread, and it's gone up. So the money they have left, and the rent's gone up, and wait till the utilities shoot up. That's the one big problem in Europe. When they're getting into winter, you know how expensive. So their $50 heating bill is going to be like $300, $400, and or they're going to be, their heat will be at 60 instead of 70, and they'll probably be out of work. So all of Europe is totally fucked. I mean, I feel sad for them. I have friends there that I said, don't worry, I have gold and silver for you. However, I don't know how to get it to them because I do not trust FedEx. And if I do say FedEx, it's going into a stuffed animal, and I'll just say I'm sending toys, but there's no way in the world I'm putting gold and silver on the FedEx box. And then hopefully they get it, and then they'll be able to survive. One of my friends, when I meet her, I actually give her some gold and silver. I'll never forget the first time I gave her a half ounce of gold. She looks at it and she didn't believe it. She's kind of like, this isn't really gold. And I catch her on Google looking up a half ounce of gold. She calls it up and she's looking at the picture on Google, half ounce of gold, and what I gave her. And then she finally realized I wasn't bullshitting her. I was actually giving her gold. I said, this is protection for you. And so when I see her, I give her a little bit of gold, and now I'm giving her silver because she needs, that'll help her also. So she has some of that. But these people in Europe and England, their heating prices are going up. Now, the question I'm trying to figure out is, why is every country doing Keynesian economics, printing, socialistic? They're not going into the low tax, gold standard, laissez-faire, keep the government out. Every country's doing this. England hasn't learned their lesson. Italy and Germany did it. Now they're not. France did it. Now they're not. Who's doing it? Well, the Russians kind of. They're backing their dollar by gold, but they're not low regulation. If they would do the 5 things, Russia would be number one. But backing their dollar by gold has made their dollar go from 120 to 50. What is the U.S. doing by raising interest rates? It's killing these countries who need the U.S. to buy other currencies or to buy other things. They're buying dollars. So why is the U.S. dollar up? Because they're buying U.S. dollars to go to, when you buy U.S. dollars, in other words, so I'm holding British pounds. Well, my value is dropping. So what do I do? So for safety, I should go into gold and silver. I don't, because I'm not listening to the professor. I go into U.S. dollars for safe haven, or even into bonds. But as I presented in real rates, you get 2% in a bond. A 10-year bond, you give $100,000, you get 2%. But wait a minute, the inflation is going to eat it all. I'm going to have 50,000 if I have that in 10 years, and I've earned 2% a year, which is nothing on my 100,000. That's the stupidest thing you could do. Well, safe haven. It's not safe haven because they're printing the dollar. So the synopsis of this whole class is that if you hold U.S. dollars, it's going to be like all these other countries that went bankrupt because they're printing and the low interest rates. So they basically ruined the currency. And you can see it all over Japan, China, India, the UK, Germany, Italy, Sri Lanka, Greece, Pakistan, just to name a few. And they're desperately going into this BRICS nation where they're going to have currency backed by gold. So gold and silver will go through the roof because it'll be backed by silver. Gold and silver are both real money and both commodities. There's less of gold. That's why it has a better value. Plus, the demand for gold is through the roof. So when I get my friends on here, my football friends, and they ask me, well, if gold goes up, how do I get rid of it? I'm like, Let's say you owned a Rolex watch. How would you get rid of it? You owned a Picasso. How would you get rid of it? You own a car. How would you get rid of it? There's a market. There's a huge market for gold. You either go back to the gold store or you go on eBay. How would you sell a Rolex? You go on. I went on eBay looking at Rolex watches. There's some for $80,000 that's sold on. So you can see people getting rid, and I'm sure they're buying gold with that money, or they're getting out of debt. So the key is get out of debt. If you have a mortgage, that's one thing. Hopefully it's fixed, so you're okay. I do have friends that are in like a $150,000 house. They have a $500 a month payment. It's fixed. They're fine. And the house is worth 400 grand. Now I go, well, it'll go back to 150, but at 500 a month, you'll be fine, because as the value of the money drops, you'll need 800, but because the contract's 500, this is why the builder raises interest rates, because at $500 with inflated dollars, he's screwed, right? He's never going to get whatever, 150,000 back. He's going to get like 70,000 in inflated dollars. The 500 is only worth 350 now. So in theory, if you were to buy a house a few years ago and you're paying 500 a month and it's fixed, you're paying back like 300 a month in now to the builder. This is why the builder's raising rates. But the problem is the builder didn't listen to me. He would have made his rates much higher. So I'm not selling a $400,000 house at 2%. I'm selling it at 7%. If you don't like it, tough, because all my costs go up and the money I'm going to get is inflated. So if you're smart, what you do now is you borrow. If you loan money out, so let's say somebody wants 20 grand from you, you loan it out at 10% to get. So what did I say? 20 grand. So what do I want? I want 10% back as my risk of giving you 20 to make sure I get paid back. So really I want 22 grand. So I got to charge 10% interest, because as the dollar drops, the interest will push it back up, because really I'm going to get paid back maybe 12, 13,000. When the dollar goes out, you got to put in the contract or of equal value. So if the dollar goes out, well, then you got to pay me in gold and silver. That's what happens. I tell people all the time, don't get paid in dollars. You want to get paid in gold and silver. That's what I tell the restaurant. You should be getting paid. You shouldn't even have $30 on your menu, say an ounce of silver. I do the football, right? And that's what most people know me for, Teaserking. And I have a customer who says, well, I don't have the money. Can I pay you in silver? I go, absolutely. You can pay me, so if you want to buy a week's 100 and a quarter, I said, give me 3 ounces of silver. We'll call it even. And I haven't gotten paid in silver yet, but I will accept silver or gold as payment for the services. Absolutely. But I do realize if you lend out money, you're getting paid back in money worth less as they print, as it's not backed by gold. So the key is you want an anchor, which is the best anchors, gold and silver, not oil. Oil, I don't understand. It's not inflationary. It's got nothing to do with inflation. It is an asset, but what's an oil well? Well, gold and silver I can hold, not an oil well. So from that standpoint, you only want gold and silver. If you loan money out, you got to raise the interest rate, because you need a higher interest rate, because you're going to lose value. So if you loan out 10 grand, you're going to want a higher interest rate to offset the inflation. If you borrow, then, if you want to go buy a car, I would say go buy a car now at 6%, $20,000, $30,000, and just laugh all the way to the bank, because you're going to be paying them back in half the value. I mean, it'll be nothing. And I guarantee you, at the end, the guy will say, you know what? I'll take an ounce of gold to pay off the debt. You watch, that'll happen. And I'm waiting for that time when I can walk into a Mercedes dealer, look at $100,000 car and say, well, I got an ounce of gold for the car. And I guarantee he'll take it, because it's real money. People will need money, because what's going to happen? The panic's going to start, right? Like it does in China. And they're all freaking out because they can't get to the bank. They can't get to their money, if the money even has value anymore. Evergrande, the biggest housing thing in China, has collapsed. Billions and billions of dollars, trillions of dollars. They're 10 trillion in debt because of this whole housing market crash. People don't understand Austrian economics are the ones that get screwed because we'll just print more money is the whole Keynesian way of doing it. We want low interest rates. We don't want people to save. And that's what we're going to do. And as you can see, it's never worked, but you can see what worked every time. What worked? Low taxes, low interest, not even the low interest, low tax, low regulation, gold standard, communications, and good law works at every time it's been done. The country booms, growth, back to full employment. Everybody lives a happy life. And that's the problem with Keynesian is it's not a real happy life. Look at communist China. They're all locked up. Look at Russia. People aren't happy in Russia. Yeah, the elite are. All these oligarchs who have billions of dollars, those are the people in Bitcoin, are the Russians and Chinese mafia who wanted to get off the radar, invented Bitcoin. And they stored their money there because you can't really know who's got it. But then if they needed the money, they could get to it, sell it, and then go buy whatever they want. And they buy all these big yachts. Where do you think they're getting the money from? So those are the people in Bitcoin, not me and you who work hard. And why? Where is it? It's not an asset. Where is it an investment? If you want an investment, as I've said several times, go buy a Mickey Mantle card. Go buy a Brady rookie card, a Jordan rookie card. Go buy that. That's an investment, right? It's Brady. He's and the reason it's an investment is it's an asset, and the demand will always be. Everybody wants a Mickey Mantle card. Not sure as much about the Jordan. Everybody wants Mickey Mantle. Everybody wants Tom Brady. Mahomes is getting that way. Burrow's gonna get that. So that's an investment because it's limited. And it's an asset. So people can, I got an asset. Where's an asset? So Bitcoin doesn't fall into any of this. And this Michael Saylor guy is freaking clueless. I'd love to have a conversation with him. He's clueless. How is it digital gold? Do you understand what gold is? I don't think you do. Let's see. Do I have a definition of gold? Well, it's gold it's a money substitute. It's a commodity instead of cows or grains. It's produced in mines. It's a money substitute. I mean, it's basically money, right? It's gold, but it's produced in a mine. How is Bitcoin gold? Where is it gold? Where is it? You have to mine for it on the thing. I mean, that's how stupid it is. You don't have anything. It's just in a computer somewhere. And how does it go up in value? There's no reason. Gold's going to go up in value because the dollar is going to drop. But if you let gold go and get off of this COMEX price fixing bullshit and you just let it run in the free market like you do other commodities or even – I don't even think stocks are free market. I think they're controlled too. A lot of shit's manipulated with these computers. I know it's like going on YouTube now. It's like, oh, commercial. Oh, another commercial. Right in the middle of the good, the guy's about to kick a field goal. Oh, commercial. And you're like, Jesus Christ. I'm getting really irritated with that. But it's all manipulated with these algorithms. Oh, okay. After so much time, go to a commercial. And that's what's happening with the stock market. And it's all manipulated. When this happens, this happens. So it's not even free market. So we're getting out of free market, which is very dangerous. So you got to be careful. This is probably free market, right? This is the market says I'll pay 50 for it. If it goes to 60, the market says no. And you can see it's a big bottle. What is this? 750 milliliters. So I'm not drinking this in a night. I don't even open it because it's more of a souvenir for me because I work there and a very good company and just a great place to work. Unfortunately, they were bought out. But that to me is just a memento memento of working there, not really to be drunk. I'll just buy a regular Canadian Club if I want to have a drink, but that'll never be open. Um, but that's what it is. You want the free market to dictate things. What's the price of a Camry? Well, what will the market bear? So what is the market is me and you are the market. But me and you have to have the invisible hand. We have to be the ones to determine the market. It's called Say's Law. The market is created by supply and demand. We demand a blue shirt or a Canadian Club whiskey or Bellagio cup, and they make it for us. Not the other way around. They don't make us. So what does that remind you of, these electric cars? Is there demand for them? I don't know. I'm not going to run and buy one. I don't want one. If people don't want one, you can't just create a market. You can only follow what the market says they want. I want a phone. Okay, you go build me one. And then good margin, then there's 5 other companies building them. That's what happened. There's Canadian Club, there's Crown Royal, there's Maker's Mark, there's Scotch, which is whiskey, there's all this sake, which is Japanese whiskey. That's just where it's made. But that's the market. There's a market for whiskey. You leave it alone. Let the invisible hand, let the people go and say, this is what I'm going to pay for it. And that's it. That's the market. And then you hope you make your 20% and then you're happy in business. You don't want the government interfering, Keynesian. You don't want, and you certainly don't want them screwing up the money supply. When you do that, you get the mess you're in now, where you got crazies like Hitler taking over. You got crazies like Putin going to war. You got China maybe going to war. You got nuclear submarines on Alaska. The whole thing is insane. Why are we at war in 2022? Okay, I get 1940, which I really don't get. And I really love to find there was a line that said, this is what World War II could have been prevented. I just read that yesterday. I apologize. I'll find it and I'll talk about it on my football. But World War II did not need to happen. I think it was J.P. Morgan, because he wanted to sell weapons and bullets to both sides. He wanted to create a market. And boy, did he create a market. And how that guy is not in prison, or how J.P. Morgan owns a bank and runs the Federal Reserve, it's criminal. I mean, this guy should be shot. This guy Jamie Dimon, who runs it, should be in jail for price fixing the gold and silver. How this can even be allowed, that there'd be price fixing and not free market. We know better. We see every time there's monopolies, there's government intervention. It's insane, and it never works. There's no positive about it. It's all negative. It helps the guy who is running it, but the goal of Austrian Economics is to help the people. The competition allows us to buy Canadian Club. They have to make it better than Crown Royal, and the price has to be cheaper. So this is $50 because it's in a competitive market with Crown Royal, with the Maker's Mark, with all the other whiskeys. Dewar's, it has to be good. If it doesn't taste good, they'll buy the other, and it's got to be affordable. That's laissez-faire economics. That's the free market. That's us running the market saying, yeah, I like this. I'll pay. This is what I'll pay for it. That's the market. There's no government does not need to be and should not be involved. You don't want the intervention. You don't want this welfare. What is welfare? Go to work. It's not hard. Go work at a grocery store. Go work at that. You should never be on welfare. What is that? You can't work at McDonald's, really? If you needed to work at McDonald's, what did they do in the 17, 1800s? There was no welfare. You worked on farms. I mean, you want to eat, go make vegetables and go kill the cow or the pig or whatever. I mean, there was no welfare, so you worked, and that's kind of what's been left alone. I'm not trying to be mean or anything, but that's really, there's plenty of jobs if you want to work. Now, it might not be your skill set. It might not be the amount you're looking for, but you should never be on a welfare state where somebody gives you money to do nothing. Where's that from? That's just buying votes, and that's bad. And we'll end up broke, and that's what's happening. We're going broke We're on a credit economy, and interest rates are killing everybody because it raises the cost. And all these people who are in debt have to pay more for their debt. So the reason the dollar is rising, because all these other countries are getting out of their currency to buy US dollars, and you can see it's all collapsing. Japan broke, Britain broke, UK or Germany broke, Italy broke, Sri Lanka broke, Pakistan. Why are all these countries doing the same thing? Why are they all broke? This is really fishy that they're all this stupid after I just showed you 10 examples of where it worked. And yet Keynesian socialism never worked. And yet people are going to that. Why would socialism work? I don't even understand. Show me an example where it worked. I can show you all the examples where Austrian economics worked. I cannot show you an example where it didn't work, but I can't show you an example where raising taxes and inflating the dollar ever worked, because it can't. Getting away from the market never works. Making monopolies never works. It helps the rich guy. So what happens is the rich guy runs JP Morgan. He runs his thing. He doesn't want competition. He pays the government. He's fine. But everybody else is fucked. All his competitors, there's no competition. Prices go up. The people have to pay more. The quality is not very good. It's not a good thing. And yet, because he pays so much, the government people, this is why it's such a sham, will go along. Well, I get $1 million. Yeah, do what you want. Hell, I don't care. I don't care about the people that elected me. I don't care about the country. I don't care that it's bad for the market. All I care about is I get my little kickback. That's the problem with government. That's why it's very hard for me to vote, because it's either idiot one or idiot two. Then you got the Chinese paying off. Now the officials are corrupt. Now the Chinese come over and buy Pelosi and buy Biden and buy all these McConnell. They buy everybody. So now if you want to live, you're going to do this and that. So we're basically run by the Chinese. They want to blow us up because they want to be the number one power. They bought all the gold. We don't have any gold. How stupid can we be? We don't have any gold. It's amazing. Well, let's go to Fort Knox and see. Well, you can't go in. Well, if you have the money in Fort Knox, you'd show us. So obviously you don't. The Federal Reserve had gold, but it was the foreigners' gold. And that was all stolen during 9/11. They stole a bunch of the gold underneath the Federal Reserve. Underneath the 9/11 buildings was all a bunch of gold. That's all gone. So there is no gold here. So if the gold price goes up, the U.S. is done. So they're doing their best to keep it down, but it's not the free market. And all I can say is that isn't going to work anymore. It's collapsing. So when I tell you to buy gold and silver, it's two reasons. It's the U.S. dollar is collapsing, as every other currency collapsed, who was socialist, who did this Keynes economics. It always collapses. And number two, not only is your gold and silver going to save you by allowing you to buy what's needed, heat, food, rent, all that, but it's also going to go up tremendously because it's been kept down. And who's been benefited from it? Me and you, if we're smart enough to buy it, and the Chinese, Russians, and Indians who are buying the gold and silver at these ridiculously cheap prices. So it's like this is $50 a bottle. Oh, you can buy it for $2. Oh, okay, I'll buy 100 bottles of it at $2. And then I'm going to go sell it to my customers for $50. That's what's happening. So all the Russians and Chinese are buying it for $1,800 an ounce. It's ridiculous. But the true value's $20,000, $30,000, $40,000. I mean, because that's priced in US dollars, but you got to realize they keep printing trillions and trillions of dollars. When you do the math, it's easily 10, 20, 30,000, but nobody's in it. So once the Americans wake up and get out of the stock market, and if they want to stay in crypto, it's going to be, I own an ounce of crypto times zero. How much do I owe? And then if you, so you have that, and what good is it? So the money's going to be worthless, and you won't be able to buy. And then the price will shoot up. And then that's where the Russians and Chinese are just kicking back going, well, I'll just wait. Because at 50,000 an ounce, and I'm paying 1,800, you do that. Let's call it 2,000. It goes to 50. I just made 25 times 25 tons. Do you know how many ounces are in 1 ton? It's like 1 billion ounces. It's just a huge amount of ounces make a ton. 23,000 tons. Do you know how much that is? Russians got, let's say, 13,000 tons. The U.S. has zero. I got a few ounces. I don't have a ton. I wouldn't even know what a ton is, but I can't afford that. But I'll tell you, I get my paycheck. I for sure buy silver every paycheck, and then when I can, I'll buy gold. And then I've sold out a lot of my IRA and bought gold with it. I mean, I said, well, it's, what's the point of having it in E-Trade? I'd rather sell it and then go buy gold with it. And that's what I do. But I always get nervous. Okay, did the transaction? Okay, does the bank have the money? And I go to the bank and I get 10, 20 grand. And then I run to the coin. Then I run to the gold store and I go, okay, do you have gold? And I've been lucky where he's had, and I'll just buy him out. Right. So I go in with 20 grand. I buy 12, 13 ounces and say, thank you. And then I'm done for a couple of months, but it's just, I want to get it before it goes out, before there is no more gold to buy at 1,800 an ounce. There'll be gold at 30,000, but how much gold are you going to buy at 30, 40,000 an ounce? The only way you're going to buy it is if you own a lot of silver. Then you take the silver and you go, give me 10 ounces of gold with my 100 ounces of silver. That'll be how you buy gold down the road. But if you hold US dollars, either the bank will close on you, or you won't be able to get the money out, or they're going to convert it to this digital crap so they can control you. So your 100,000 will be worth 20,000 digital. Isn't that nice? And what's the 20,000 fiat digital going to buy? It's not backed by gold. It's going to run into the same problem we're having, where you're going to print more. It's going to be worth less. That's what's going to happen. So keep that in mind. This is protection and value. So this is not only you're getting out of US dollars, one, before it depreciates to zero, but two, then you're in gold just before it's about to hit the moon. So it's a double sword that you're making. Now, the problem that Americans have is belief. Well, Howard, but it isn't. It's 1,700. It's not high. Well, that's the COMEX derivative AP Morgan price. It's not the real price, and I'm talking physical. And I'm differentiating paper from physical. These idiots on YouTube, most of them don't differentiate it. They go, well, gold might go to 2,000 an ounce. Yeah, that's derivative price, not physical price, but they don't tell you that. We really don't understand, are they all that stupid, or are they all salesmen? And do they all not know? And I believe most of them do not know, don't have a clue, or it's not in their best interest to explain it. I do this for you. I don't have a gold store or silver store. I just buy to protect. I want to protect my family here. So I'm telling you, this is what is going to happen very, very soon. But I can't tell you it's going to happen Monday. So you have to trust me that I just gave you Austrian Economics that says the fiat currency will go to zero. Where's my little note? Fiat, let there be light. Fiat money produced by government. So it's not backed by anything. It's a money substitute. It's not money substitute, check bank or checkbook, money certificate, 100% backed by gold and silver. Those are silver certificates, gold certificates. Fiduciary money, acceptance of truth, word of honor, based on a witness, checks, 2 ways to know something, observation and faith, belief, leap of faith, trust, produced by bank. Fiat money is produced by the government. Let there be light. Trust us. Do you trust the government? Now, you can't just keep printing. If you just keep printing, you will not have money left. They just create the money. And I'm going to end with Say's law, which is my favorite. JB say, why do people want money? A means to an end. Take money to buy goods, produce goods and services to get money, to demand other people's things, produce goods to get money to buy other goods. So that says law, and that's why you do it, but you need sound money to do it with. So really, the question that I present to you as I will end this class is, do you believe what I'm saying? And again, it's not my opinion. This is from my master's program on Austrian Economics at a business and accounting school with my notes, which I'm showing you. So it's not me trying to sell you anything. There's no sale going on. You're not buying, you're not paying for this class. This is strictly, do you want to learn? And then, so what I'm presenting is the fact that the money, the currency is not backed by anything. It's the faith of the government. How much do you believe Joe Biden and the Chinese and the government, after seeing what's happening throughout the world, Japan and all these other countries, China, England, going broke? Do you believe we won't? How are we going to survive if they can't buy our goods and services? How are we going to survive if they keep printing the money? The fact that they're raising interest rates does not stop inflation, only if you put the money back in and they lower the money, but they keep printing the money. They're not stopping printing because they got to buy the bonds, because when the bond market crashes, it's all over anyway. So the current money supply, which is government-based, is collapsing. It's going to go to zero. They're trying to save it by raising interest rates, but all they're really doing is crashing all these other countries. Why? Why would you crash the other countries? And yet that's what they're doing. If they were really serious, they would have raised rates 10%, not 0.75%. So there's a game going on. Why are all the countries going bankrupt? So the question is, it's not, okay, best case scenario, the raise rates and the dollar's fine and you're fine and your 100,000 is worth 100,000. Well, wait a minute, prices went up, so my 100,000 doesn't buy me. It's really, what does money buy? Well, 100,000. So it used to $2 used to buy a gallon of gas. Now it's 3 or 4 to buy the gallon of gas. So wait a minute, why is it costing me more money to buy the same gallon? Gold used to be $35 an ounce, is now, let's say, $1,800. Well, it's still an ounce of gold. Now it takes me $1,800 to buy the ounce of gold. Well, why? Oh, wait, they've lowered the value of the dollar. How did they do that? Well, they printed it. Okay, so the challenge is, okay, Howard doesn't know what he's talking about. Keynesianism works, even though we've provided 22 examples where it doesn't, and it never has. Go buy your gold. And if nothing happens, you go right back to the coin store and say, you know what, I want to sell it. Or you can sell it to me. I'll give you the price for it. So I bought it for $1,800 and now it's $1,700. You know what? It's not going. I'll take my cash back. Believe me, you'll have a line of people willing to give you $1,700 for that price of gold. And that's your biggest risk. Okay, I got out of dollars. I'm not getting interest rate. So you have risk that you'll be able to get it out of the bank. That the first risk is, will the bank stay open? The second, and just look at China and Sri Lanka and Greece, they closed the banks. So will the bank stay open? Will I be able to get my money out? What will the value of the money be? And then if I hold gold, my risk is it goes down in value. How likely is that to happen? All right, we know COMEX is fixing it and not even the real physical price. So if COMEX is not the real physical price, what's going to happen when it hits the real physical price? Yes, COMEX has been like this since 1970. It's 50 years of price fixing. But now what you've done is you've let, I don't remember the expression, you basically let Russia and China in. Now, for further proof, Russia and China are coming out with the dollar backed by gold. Why would they do that? So there's a dollar backed by gold out there, which is going to force physical gold to go up in value because you're going to need gold to back the dollars. So that's your first thing right there. So wait a minute. Okay, Howard doesn't know what he's talking about. Keynesian does work. Austrian economics doesn't work. The U.S. dollar is going to be fine because it's always been fine. Gold won't go up. It's priced in COMEX. It's not even physical. Okay, so in that scenario, why is it $4 for gas, and why is food going up, and why is electricity going up? In that scenario, that means the dollar's losing value. So if, at worst case, the dollar's losing value. So then I buy gold and silver with it, and it doesn't move. Okay, now what do I do? All right, so you can go trade it back in for worthless dollars, or you just hold on to it and hope that it goes up. So it's been a year, it hasn't gone up. Okay, I'll trade it back in for the dollars. Do you really want to hold gold and silver, or do you want to hold dollars that aren't backed by anything, that are being printed? It's the fact that they're being printed and we're 10 trillion or 20 trillion dollars in debt that make the dollar worthless. So if all the other countries are exploding and failing, the pound, Britain, Germany, Italy, the Euro nations, Japan, and China, if they're all failing, Sri Lanka, Pakistan, Zimbabwe, I mean, you can count the countries, Brazil, Venezuela, they're all going broke. Well, wait a minute. They print their own dollars. Why would that happen? And as soon as the gold breaks away from the US dollar, that's really your risk. Is that really going to happen? Is gold going to really break away from the US dollar and go up because the US has been controlling it for 50 years? Or it's not really going to go, it's worthless to go into it. Okay, then where do I go? The stock market's crashing. You can't go into Bitcoin's not real. Where do you go? Oh, buy a house. Well, why are the interest rates going up? So the interest rates go up because the dollar loses the value, and the guy who's loaning the money wants to get paid back in dollars plus the inflation. So he charges more of an interest rate. Or go buy a car. They're going to want more percentage because they don't want to get paid. They don't want to loan out 30 and get paid 20. They want to loan out 30 and get 35. So they got to raise the interest rates to do that. Why the Fed's bankrupting all the other countries, this I don't know. This is a China thing, I guess. They're trying to bankrupt Europe is what it seems like. That's what's happening. Europe's going to be in trouble with the higher heating bills. So if you had gold and silver, it'd probably benefit you with these higher heating bills, right? I mean, you'd be able to afford it. So let's really risk and reward. The risk is I sell US dollars or Canadian dollars or wherever you're from, British pounds, and I buy gold and silver. What's my risk? That the dollars really aren't inflating. Well, we see the prices going up, so we know the dollars are inflating because that's the effect of inflation. The prices go up is the effect, the cause as you print it. So obviously they're printing because obviously the prices are going up. It's got nothing to do with supply chain. It's got nothing to do with shortages. That is other areas, but it's the inflation. It's really, you need more dollars because you're printing and the dollars are losing value. That's what's happening. So my gold should go up because it's an asset and it's money. So my risk that I just sold 100,000 in British pounds and I bought 50 ounces of gold. And so my risk is my 50 ounces of gold go down to 20,000 versus 100. Is that even possible? No. So the risk is the 100,000 in gold stays at 100,000 versus going to 500,000. That's your risk. It stays at 100. That's not a risk. Versus my 100,000 in the bank where the bank closes, like in China, or the 100,000 goes down to 10,000. That is a risk. That's more likely, more of a probability of happening than gold going down. Being able to sell the gold is a no-brainer. You go on eBay, you can call me, I'll buy it. I mean, there's plenty of people who will buy it. Believe me, go to Russia, China, or India, and there'll be a line of people wanting to buy gold and silver. Okay, just they're buying it. Where did they get 25,000 tons in China if they're not buying it? Or Russia, 13,000 tons. They're not buying it. Well, why do they have so much? Why are all the central banks buying it if it's not a good idea? So if you just look at what other people are doing, going, this is probably a good idea. If every central bank in the world, but the U.S., Canada, and England are buying gold because they know the currency is crap, and their only way out is not stocks, is not Bitcoin, it's gold, and that's what they're buying. Why are they buying it? Because they know it's their way out. So your risk that it won't go up in value is, okay, I'll return it for the money that it is. But even then you'll get more than you paid for. So if you have 100,000 in gold and you trade it back for whatever currency, you're really getting more because the 100,000 you paid is now worth 80 because of the inflation. So now my 100,000 in gold would be 80,000 in dollars. So I've already made 20 grand without doing anything. And then you just hold it. And when you want to sell it, you go on eBay, you go to a coin store. Just think of it as a Rolex. So you could buy a Rolex. The problem is, I don't know that you're going to take a Rolex into a Mercedes dealership to buy $100,000 Mercedes or to buy a house, but you are doing it with gold. Because what's the guy going to do with a Rolex? But the Rolex is an asset, and yeah, you can go on eBay and buy a $80,000 Rolex if you want. That's perfectly fine, and you go from there. But that's about it. So I don't, you've got to get out of fiat currency. You can't trust the government. When has the government ever told us the truth, and do they ever care about us? If they did care about us, you wouldn't have monopolies, because monopolies hurt us, because it's better for us to be in the market and let us handle it than a monopoly. Monopolies are not good for us. They're good for the monopoly guy. So that's just wrong. So I don't think you have any risk. It's just a matter of time. Let's see what happens by Christmas. Now there's 3 black swan events that when you hear, you're going to go, here comes gold and silver. The first one is China or Russia announcing they have 25,000 or 15,000 tons of gold. Because that'll be more than the U.S. That'll freak everybody out. The second is Saudi Arabia saying, you know what? We're going to take money from everybody, not just the U.S. Because right now, the only way to buy oil is in U.S. dollars. Well, that's going to go away. Now it's going to be, and I don't know why Saudi agreed to that. I guess it was a protection thing. We'll protect your oil if you sell it to us. And at that time, China and Russia weren't powers, 1980s. So that's why they signed up. Otherwise, we probably are going to blow them up or something. So, but that's been that way. That's why the U.S. has been lead currency. You had to buy U.S. dollars for the oil. Now, when they come out and say, no, we'll take the rubles or that new BRICS currency or whatever, that ends the U.S. dollar. That's swan number 2. Swan number 3 is the bank holiday. Well, the banks are going to take a holiday. You know what happens when the banks take a holiday? They reset everything. And they're going to say, Teaserking, you had 100 grand in the bank on Friday. Today's Monday, you got 10,000. Or you can't even get it out, or you don't have any money in the bank, or the bank's closed. Will the bank close? I don't know. I don't think the Federal Reserve can take over as Comerica or as Chase or whatever. And I don't think the banks want to go out of business. They make too much money. So I can see the bank's holiday to reset your account. Well, you're really a shareholder, and we really needed, you have 100,000. We really needed 90,000 from you. You have 10,000 in the account. That's the bank holiday. Then they're going to reset gold. It's going to happen over a weekend. And they're going to say, okay, the new value of gold is not 1,800 COMEX anymore. It is now 30,000. And I don't even know if it's going to be U.S. dollars or whatever. But eventually it's not going to be in U.S. dollars. Don't worry. That's okay. It'll be whatever gold buys. Like I said, an ounce of gold is going to buy a Mercedes. So it's not going to be priced in U.S. dollars, but that's a good thing, not a bad thing. That's what will eventually happen. So you don't have to worry, oh my God, the U.S. dollar collapses, my gold is worthless. No, just the reverse. And you don't have to worry, well, will somebody want it? Everybody will want it because it's safety. It's the only safe thing you can get into. So you can't, what are you going to do? Okay, currency's crashed, stock market's crashed, my house dropped in value. What's the Bitcoin? Really? But I can't spend it. And what is it? It's worthless, and it's in the US dollar, so it's worth zero right now. Will Bitcoin switch to like gold? So gold will buy you a Mercedes. Can you walk into a Mercedes and say, I got a Bitcoin for you? So you're going to take it. What's the value of it? Gold will know an ounce of gold will buy you the Mercedes because it's money, and the guy will like love it. Like, good, the US dollar's shit. I'll buy, give me an ounce of gold that'll be worth a ton. Everybody wants it. You can't go in with Bitcoin. You can't go in with stock of Microsoft isn't going to help you because that value is going to be nothing. So your only really alternative is gold and silver. Maybe you walk in with a Rolex. I don't know. What are you going to do with an $80,000 Rolex? If gold hits 80,000, I can still have half ounces, and I got quarter ounces, and I got silver. So the ounce of silver will be worth 20,000. And then there'll be ways to make change and stuff. That'll always be there. So don't worry about that. Just like now, you got $100 bill and you need change. They got 20s and 10s and 5s and 1s and all that kind of stuff. So that's what's going to happen. But this is going to happen quick. It's just going to be boom. So I think I've been helpful explaining Keynesian versus Austrian, the market. We're the market. That's what works. When the governments control things, it doesn't work. Governments, they want this power and control over you. They don't understand they're supposed to be, I think the only reason to have a government is you need a leader. And I'm not sure you need a leader. I'm pretty sure me and you can coexist. I'll give you money for bread. You give me bread, or I need eggs or chicken, and you give me here's an ounce of silver. Give me a chicken. I think that would work fine. I don't really think that we need the government. All it does is interfere because they always lose track. We have a freaking constitution that they don't follow. They're all crying about Roe versus Wade. Well, it was a judgment. They said, you know what? It's not constitutional. I don't really want to get into Roe versus Wade, but it's just not. It's whatever it is. But that's what it is. Anyway, I hope you enjoyed class during football. So I did my football. I'll do football tomorrow. I'll do the college. I've already got 6 locks out there for people interested. I've already wired my guys who are my bought for the year or whatever. They know the locks are out there. And the reason I put them out earlier is because the lines that they're at. Last week, I won the Jacksonville under at 53, and it went down to 44, and I was on 2 tickets with 2 of my friends, and it went down to 50, and these were pushes. Ties are pushes, not losses. But we should have won. If we would have bet them earlier at the 53 or the 52, these are winners. These are big bets that we pushed because of the 50. So I don't want that to happen. I want get the bet in at the point that I want it at, not because the spreads I know will change. I know when they're going to change, and I know what direction. And I was surprised Jacksonville Philly went down from 47 to 44. I bet it at 53, and it was a W, but it went down to 44 for 50. I'm surprised it dropped 3 points. But it did end in a 50, which was shocking that they kept missing the extra points. There was 3 extra points missed in the game. Anyway, I don't know how I won it because it was 20 to 14 at halftime. But anyway, so that's what's happening. These are great notes. I'm going to publish. I have the 11 steps of the trade cycle, and I don't know where to. I'm going to print it out in Excel. And I don't know. I'll just have it for anybody who wants it. So I'll make sure it's on my football. Just email me and I'll send it. It's very critical. It explains everything that's going on. It explains the trade cycle. And I even did, that was my directed study, not a thesis, but it was a directed study. And what I did, the way I think, it implied when interest rates go up, these stocks do well, these don't. When the rates, so the trade cycle is raising rates and then lowering rates and then raising them back. And when you raise rates back, the good companies to buy stock in are Coke and Pepsi because people are always going to buy it and they're not really affected by it. But the housing stocks and the car stocks are not good to buy when rates are going up. They're good to buy when rates are going down. So that's kind of what it shows. And it explains like the inverted yield curve is the start of the bus. We're now in this part where the banks are freaking out. They want to get their loans paid off and they don't know where to loan their money to right now. So that's where we're at. We're near the end. But so here comes this depression. It's like the perfect storm. You got the big wave coming, and ain't nothing you're gonna do to stop it. It's here, it's coming. All I can say is just go buy as much gold and silver as you can because most of us will lose our jobs. Most of the businesses will go out because there's no other way. You either stop selling Canadian Club or you lay everybody off, and then you can keep selling it. And the only way it's going to come back is when they come out with new currency that's backed by gold. Your gold's going to go up so much, it's just crazy. And your silver, so buy that. Buy your Mantle cards, buy your Brady cards. Those will go through the roof. Paintings, diamonds, any asset that it's got to be demanded and it's got to be easy to prove. So a diamond, you got to almost get it certified that it's the color, clarity, and all that stuff. You got to make sure that's what it is. And then once you've got it documented, so like go buy a coin that's PS 70, right? That'll go up in value, especially a gold or silver one. But I find gold just goes up with the price of gold. You don't really need to get it graded. So if you were to buy a graded coin, it would go up because of the grade, or like a card. You buy a Brady or a Jordan or a Mantle card. You buy a Mantle card graded PSA 9, you're done working. You're a millionaire, and you're going to be a multimillionaire when you're done with it. Maybe even the Aaron Judge cards, I might run and buy those. He just hit. What can you explain the difference between a National League 73 home run bonds and Aaron Judge just hit 61 or 62? Like, dude, he's only hit 62. The record's 73. Oh, the American League record. What the fuck? Oh, why don't you just say the New York Yankee record? The American League East record. I mean, what the fuck? Bonds hit 73. That's the record. You can't hit 62 and call it a record. What a joke. Anyway, that's the problem with it. So anyway, I think that's class. Any questions or comments, please ask them now. That's why I do a live chat. www.teaserking.com. You'll get my email there if you want to ask more questions of this, or you want any part explained or any part sent to you. I'll be happy to. I want you to learn. I want you to understand because there's a bunch of confusion out there. As Jay Brady 100 said, lots of confusion. Crypto guys, that the world is shifting to digital currency and crypto will be the way. Gold and silver is always the way. It's proven from the Roman times. This is a gold. This is a solid gold chain, 18 karat, worth about $3,000. Can I buy a crypto gold chain? Can I buy a crypto ring to get married or to give to my kids? A crypto? No, I don't think so. Crypto is not the wave of the future. Jay Brady, ask them, or Jay Bradley, please ask them why. Why do they think that it is? And let's say it's limited. And you say, well, gold's more limited. Then you go and you say, well, you know what? This Tom Brady rookie card, there's only 700 of it. That's pretty limited. And it's Tom Brady. If they really want to get picky, you can give them. I have a Barry Sanders 25 count. Hell, I have a Steve Eiserman 1 of 1 count. How limited is that? Is that a little more limited than a Bitcoin? So crypto is not the wave of the future. They need to explain it. Whenever I'm at poker and somebody says, I'm in crypto, it's going to go up. I go, why? And I go, can you please explain it? And they can't. And then they're just bullshitting. They might own it and they might hope it goes up, but they don't have the reason why it's going up because they don't understand economics. You just learn why everything happens. You learn why the market goes up, why my Canadian club goes up. It's demand. Supply demand is the market. If more people want it, Say's law, more people want the whiskey than is made, the price goes up. If they make more and there's more competition, the price goes down, the quantity goes up, and the consumer benefits. And that's why there's Crown Royal and Canadian Club and Dewar's, and the price is cheap because they all want our market. And to get our market, you've got to be cheaper and better quality. Everybody wins with competition. Once you make things monopoly, the competition's out the window and the consumer gets screwed. And that's what happens. So you want free market. And that's what you want. Now I could charge a lot more because there's not competition for my service as far as handicapping. The other guys can't compete with me, but I won't do that to people, but I know there's no competition at my level. Just like I just gave you here, there's really few competition at my level for what I just taught you. But I'm happily giving it away because I want you to learn and benefit from it, because I'd rather save you from what's going to happen than, I don't want to make money on you for this. This is very, very important that you understand it and you learn from it. And again, please feel free to ask me questions. www.teaserking.com. Get my email, ask questions. What do you mean by this, or Bitcoin, or whatever you want? No, Bitcoin's not money. It's not going to go up. It's not going to save you. All right, everybody, that's it. I always enjoy teaching, so that's why I do these kind of stuff and football. Tomorrow will be college, my picks for this week. Friday will be the picks for the pros. There's already 6 locks up and a few other games I already see that I'll probably put up today because I want to get those lines, and you can see how as the lights go on Friday and Saturday, the spreads change. I'm ahead of the curve. I already know where the spread's going, so I'd like to get my picks in at the good spread. And anyway, have a great day. Thank you. Please be careful. The tidal wave's here, right? It's coming, and you got to get out of the way, or you got to go put on your raincoat and get your umbrella because it's about to hit you. There's nothing you can do. All right, everybody. Have a good day. Thank you very much. The Professor.